Hello, hi everyone. Good afternoon. This is Vikrant here from the Digital Fifth. I'm with my colleague Chris here. So now still people are our friends are joining in. So we'll wait for a minute for others to join in, and then we'll start the session. Okay. Yeah. So people have come in. So thank you for joining us. This is me, Vikrant here from the Digital Fifth, and as I mentioned earlier as well, I'm accompanied with Chris, who is a colleague from my side. Yeah. So thank you for joining in and registering for this session. Largely we want to talk about the credit cards, how are and the regulations around the credit card is the topic of today's what we are looking at. Yeah. So on the sideline, this is the agenda which is there. We'll be talking about the emerging trends, regulations, and impact on the segment from the perspective of credit card. So we'll be talking about some overview of basics of credit cards and the business model from the issuer perspective. So with the limited time, we will be able to only cover the one side of business model. I understand, of course, from the other side, like from the acquirer side and also from the co-branded partner side, the business model would be different. But today we'll be covering only on the issuer side. Also, we'll try to go deep into the retail credit card ecosystem to understand what are the different parts of the ecosystem that I've been touching as a part of credit card framework. Some part on the regulatory frameworks, and also we'll talk about the emerging trends in the credit card. So just a little bit introduction about myself. I'm Vikrant Kulkarni. I work as a principal consultant at Digital Fifth. So I've been handling multiple projects from the payment domain in my earlier experiences. So continuing in Digital Fifth, I have been a part of the journey for the Digital Fifth into the business as well as from the technology consultancy perspective. So I've been working on the strategies and the implementation of strategies from product management, program management at some of the assignments. So yeah, I have been working with Digital Fifth since 2 years, and currently I'm working on the projects which are largely driven from the strategies perspective for the banks as well as for the fintechs. So I'll just take a minute from Chris to introduce himself as well.
Hi everyone, I'm Chris Jack Walter. I'm currently working with the Digital Fifth. I'm an associate consultant, and I have currently mainly worked in the regulatory compliance aspect as well as product and program management for the Digital Fifth, and I'll be looking forward to going ahead.
Yeah, thanks, Chris. Thanks for the introduction. So we'll be moving on to the and we'll start the session now. Just to start, to keep it as a short introduction of ourselves. So we are Digital Fifth, as many of you may must know about us as well. We are been into the digital finance consulting, and we have just completed our 7 years as well. So yeah, a lot of the friends from my client side assignments also I can see into the attendance list. So thank you very much for joining us. So we are largely work on the digital finance consultancy, that is from fintechs and from the bank's perspective as well. Be it digital advisory services, open banking services, technical due diligence, fintech, and fintech startup advisory services, security compliances are the larger areas where we work upon. And we extensively do research because that's where we get a lot of knowledge from the market as well. So digital research and content management is another, what you can say, the separate service that we run internally as well. Yeah, just to give a short brief on our customer segment. So we work with large fintechs and enablers from the perspective of the fintech consultancy and bank fintech partnership perspective. We got chance to work with the banks as well, very closely on the credit card segment. Also, as well as even one of the bank in international segment where we worked to set up their business model for the credit card, that is for the different categories of the customers as well. I mean, when you look at credit card, the according to the customer segment, the offerings would be the different. So we got chance to work on the business model there as well, and I was involved into that project. So got chance to learn a lot about how the credit cards are perceived outside the India as well. So yeah, from other services perspective, we do work with the clients on embedded finance trainings, as well as a few of the other services like technology due diligence is something which we closely work with our investors clients. And from the NBFC's perspective, we are largely work on the risk and compliances frameworks for banks as well as for NBFCs as well. Yeah, coming back to the topic which we are want to discuss is today is from the overview of credit cards and the business models. I would just request Chris to take over this.
So talking about the overview on credit cards and business model, we'll go through the credit card, the major types, and we'll take a look at the model and the credit card itself. So credit card. Credit card is basically a card which is issued to cardholders so that the cardholders can purchase goods and services from merchants on credit. So with credit card, the major benefit is that you are able to make huge purchases online on credit, and this is one of the most biggest benefits of the credit card. It's their convenient credit, which is applicable, which is basically a credit that you can make that you can use to make purchases online and so on. Along with credit cards, the major aspects that it brings along with it is the rewards, the credit building for people who come into credit card, who come into the credit ecosystem for the first time, and the fraud protection that it offers. With credit cards, there are multiple rewards and other redeemable aspects that help bring that poise it for a major part in the card industry. And credit building is for any customer who is new to the credit industry. Maybe the customer has a thin file, or he's new to credit. So a credit card is a great way to build your credit history. And of course, credit cards have multiple protection features which help you protect yourself from fraud. Talking about the types of credit cards, we mainly look at retail, corporate, and proprietary. We'll be looking at, with respect to retail, we'll look at the personal credit cards, the charge cards, corporate cards, and business cards. So, talking about retail credit cards is issued by financial institutions to individuals for their personal use. So, this is a personal credit card that is issued to card holders. The main purpose of these credit cards is basically a way to provide, you a convenient and secure way to make purchases without the need to utilize large amounts of cash, as well as to make purchases without utilizing your to make purchases through the use of credit. So credit cards are usually accepted by multiple merchants, and they are also at times preferred, making them a huge convenience when it comes to payment options for transactions and so on. And along with it, it comes the ability to build credit. So credit cards is a great way to basically help an individual establish themselves in the credit ecosystem. It will provide them a great way to build a credit history, and over time, this can be used to obtain credit loans, mortgages, and other credit products in the future. And rewards and benefits is an integral part when it comes to retail credit cards, with the multiple rewards programs that it provides, such as cashback, your travel miles, or point for purchases. All of these entice card holders to utilize credit cards, and this definitely adds the flavor to retail credit cards. Now talking about corporate credit cards. So corporate credit cards are basically credit cards that are issued only to corporations. So the main purpose of these corporate credit cards is basically for businesses to utilize to spend without the use of cash in hand. So this corporate credit card can be utilized by the employees of the company to make any spends and so on without the use of cash, and it enables the corporation to have a convenient way to manage their expenses, because often without a corporate credit card, the corporation will have to result in let's say for a consulting company, the employees might have to make multiple travel related trips and so on. And if there's a corporate credit card, they would be able to utilize the corporate credit card to spend, and the corporation can utilize this to track and manage the business expenses easily. However, if the corporate card is unavailable with them, then they would have to resort to having to take a reimbursement, which is basically an extra process of tracking and expense management for the corporation. It's also a centralized spending control. So companies can basically set their specific restrictions or spend limits on corporate credit cards to ensure that the company's policies are and expense policies are followed by the employees. This basically helps prevent any excessive spending, as well as helps prevent any unauthorized spending, which is the main aspect of it. And building business credit. Business credit is also a huge aspect of this, and this will basically help, provide a way for the company to establish and improve its credit profile. And this is very advantageous for companies that are especially seeking financing, or will have to negotiate certain terms with vendors, suppliers, and so. Now, talking about the co-branded credit card, the co-branded credit card is one of the credit cards that's currently in a huge growth phase. It's basically offered by a issuer and a brand partner. This co-branded credit card usually comes with a specific type of benefit, like let's say a retail benefit, a travel benefit, or a hospitality benefit. There are huge advantages to co-branded credit cards. It is of advantage to any entity with a huge customer base, as this is great for the issuer as well as the brand. Because for the issuer, there are advantages like they have obviously higher card activation rates. There'll be a preferred card for a specific brand. There'll be growth in the customer base, as well as an increased average spend for that specific brand. And for brands, it's again a great aspect wherein they have an increased customer loyalty. Basically, with a customer taking a co-branded credit card, the brand will always be in the mind of the customer. There'll be increased revenues, visibility, as well as they'll be able to win further customer purchases from their competitors, as the main brand is kept in the mind of the consumer. Now, talking about an authorization flow for a credit card. So basically, when a bank issues a credit card to a customer, the customer will essentially swipe the card at a merchant, and the merchant will send the credit card info to a acquirer bank. The acquirer bank then takes this and sends it out to the network for an authorization request. Based on this, the network routes any authorization request to the issuing bank, and then the issuing bank will respond to the network on the authorization request. So this is a basic card authorization flow. Now, talking about the settlement flow. So when it comes to settlement flow, the merchant obviously, let's say there is a payment of rupees 100 that is being paid, and there is a certain percent of MDR that will be taken by the acquirer, the network, and the issuer. So when there is a transaction that is happening, the card info is basically sent out to the acquirer bank, where the acquirer bank sends out that info to the network, and the network sends that to the issuer. So the issuer will basically take an amount which is sent as the interchange income. The second in line would be the network, which would take switch fees from this interchange income, and the acquirer will take the least amount of interchange. This is because the issuer bank will be taking the most amount of risk with respect to the income that with respect to the transaction that is being sent out. And with switches, mostly there's a fixed fee that comes along with it. So the network will be taking its percentage of the interchange income, and the least interchange income will be taken up by the bank. Now, talking about understanding a credit card. So when it comes to a credit card, the first number usually represents the network or the system number. So it will represent a network that the card is utilizing. The next six digit is basically the PIN number. It is the bank identification number, which identifies the issuer of the card. It will also offer tracking for specific cards on pause and so on. And the next eight digits account for the account number, and the last digit accounts for the check digit, which is basically the check sum, which will take into consideration whether the other numbers in the card are with aspect to the algorithm of the credit card. Now, talking about the business model canvas. So, with respect to the business model canvas, our main aspect is for an bank. And when you look at the key partners for this aspect, the main aspect that you'll have to take into consideration would be the network, the credit card management system, the payment switch, credit bureau, account aggregators, and so on. So these are the key partners that you would require so that the credit card system in your organization, or if there is a requirement to set up a credit card system, would require. Now, talking about the key resources that are required for this aspect, it would be the tech infrastructure for a secure and efficient card processing. This is one of the most important aspects. You will require a tech infrastructure, followed by data analytics. So for the generation of a credit card, you would require insights on the customer, and a risk assessment would require to be taken prior to issuance of a credit card, and the employees that would be managing these activities. Now, talking about the key activities, the main aspect that would be required for this would be customer acquisitions through campaigns and partnerships. So customer acquisition is the main aspect, since this is what would essentially bring in the revenue as well as the user base. You would require risk management for credit score and compliance checks. You would bring in the required users, but they would have to be it would still have to be users whose credit score and risk management aspect would need to be checked before the issuance. Then you would look at product development for your credit card. So as with credit card industry, the growth, there is a huge amount of growth, and there is always new features that are being developed, and this is one of the key aspects to taking a huge part of the credit card market. And then lastly, we come to customer service, which is a huge aspect. So handling of inquiries, disputes, and assistance of any sort is one of the key aspects when it comes to credit card, and it has to be taken into consideration. Now, talking about the value propositions, the most important value proposition currently would be convenience. So, credit cards' main features is its convenience. So, having faster and more secure transactions, along with more online applications for the processes of the credit card, is a great value proposition for credit card. Along with rewards, rewards are one of the most important aspects of a credit card, and these often factor in the segment that you're targeting, and cash discount, travel benefits are one of the main aspects for the same. Now, we'll also look at form factors and card customization, which are one of the upcoming value proposition, wherein variables are some of the aspects that are also bringing in the newer customer segments, along with card and material customization. Talking about customer relationships, we'll be talking about 24/7 assistance, online chatbots, as well as loyalty programs and so on. Talking about the channels, the main aspects would be online application via website and app. These are one of the most important aspects to consider. Then there's always physical branches and digital marketing. Looking at customer segments, we'll be looking majorly at salaried, self-employed, and businesses. Talking about the cost structure for the same, you would have to factor in the cost of funds, which is the biggest aspect of it, followed by staff costs, software costs, and there would also be a provision that would be required to be kept for rewards, as well as the collection costs and the network costs for any key partnerships. When it comes to credit cards, the major revenue streams are always built in from the revolving interest that comes along with it. There's also EMI interest that is a main part of it, followed by PLCC interest. So often there is also an introduction of personal loan along with the aspect of credit cards, wherein there is an aspect of trying to change the to onboard a user, credit card user to a PL user, and so on. We'd also have to look at the interchange revenue that comes along with it, late fees, which is another huge aspect of the credit card, followed by annual fee and the forex markup that is considered one of the main aspects of credit.
Yeah, thanks, Chris. So we'll be taking over on the ecosystem side, but before going into that, we would be sharing a link for the feedback. So do request all of you to do share the feedback as well for the session what we have done so far. And just on the side chat, will would like to mention that if you have any questions which you want us to pick up in between, you can put it in the chat window. As and when we'll have the pockets for the question answer session, we'll be able to pick up that questions for you. Yeah. So coming back to the retail card, credit card ecosystem. So this is the broader way representation of the ecosystem. So I would like to call out that this may not be exhaustive. There might be a few of the, few of the logos or few of the players who we might have not mentioned it here, but it's nothing on purpose. It's just that we could cover up this much on the from the player's perspective. Yeah. Starting from the upper layer is largely talks about the segments where they work into. Like the larger area where the credit cards are being used is entertainment, restaurant. So if I know correctly, the story of credit card started with the restaurants itself. So yeah, that is how it got entered into the market and slowly got into the diversified segments like supermarket, grocery stores. You will have apparels, telecom industries, entertainment, utilities. So largely everywhere the credit card have been used by the credit card holders per se. Talking from the perspective of ecosystem, so it comprises of multiple players. Like you'll have payment switch networks, bureaus, fraud risk management players, ATMs, and 3D secure for the additional security of the credit card transaction tokenization platforms, which largely also called as a token service providers. Then co-branded partners. So co-branded partnering is something which is a trending thing now. There are a lot of co-branded credit cards into the market that is into the different you can say different sort of segments as well. I mean, each segment have some of the players which are entered into the uh, uh, co-branded partnerships per se. These are the pretty what I can say the representation of it. So would like to just have a look at it in the detail. Like we'll try to go deep into each of the segment, but prior to that, would like to call out on the some of the parts. Like it could be from the perspective of say. Just for an example, like co-branded cards, which we are talking about. So this is something the area which is getting evolved now. So if you see from the travel industry perspective, we will have the example written here is from the Vistara and Ola. From the shopping perspective, Flipkart, Amazon. From the I can say the stay hoteling perspective, we'll have Make My Trip, Exigo. From the shopping perspective, Chroma, Lifestyle, and so on. Right. So, what has helped and what has worked out for all the co-branded partnership is largely to have the customer to come to the platform, get it served with the specialized offering which is related to that particular segment. And since the rewards also been provided, which are very much personalized and the relevant for the credit card user, typically the users of the co-branded cards have been seen picking up the traction out there. Yeah, from going from to the perspective of the other sectors, will just go deep into each of the segment now. So likewise, when we few basics ones, like when we call out as a issuer, the issuer is the entity which largely the one who issues the credit card. That is in association with networks. Of course, networks are the one which are very integral part of the transactions, because these of the transaction passes through the network. And they do in India, what we have today is like Mastercard, Visa, RuPay, Amex, and so on. So networks are there which supports this transactions as well. Coming back to the issuer side, so issuer is the one who has who always takes the risk to provide the credit on the card which has been swiped. Hence, definitely the share of issuer into the considering the whole interchange per se would be the higher at most of the times. Yeah. So the approval of transactions, checking the PIN, sending OTP to the customer, checking his OTP, etc. These are the additional services which issuers does, other than getting the application in and delivering the card to the customer. Yeah. From the perspective of acquirer is the one who accepts the transactions. Likewise, POS machines, what we see, or the payment gateways where we use the credit card, is largely backed up by the acquirer bank. So acquirers do partner with the payment processors, or they may have their direct acquiring channel as well. And then they acquire the merchants where these cards or the POS or the payment gateways are activated. And from there, they accept the funds. I mean, the large banks, if we see in India today, so they are having a largest network on the ground where they have what you call it as a feet on the street, and they try to acquire the customer on their own through the POS machines, partner with either of the payment processors. Network we talked about. Would like to highlight on the credit card management system, that is CCMS. So this is CCMS is largely been focused to build up the cards, because unlike the debit card management system or the prepaid card management system, credit card has the additional component which largely works on the risk factoring. So that is something which gets added into the credit card, and also the rewards mechanism and the I mean. What you can say, multiple partnerships which banks goes into, is somewhere the credit card management makes a lot of share of their sense into the partnerships as well. CCMS basically is been used to create and manage the cards. I mean, both will it be physical as well as virtual, because as you might have also observed, the virtual credit card is something which is picking up into the market, because you don't need to carry the card with you always. Likewise, if you are saying, I mean, the way debit card has transformed into the mobile phone app, the credit card is also following the same way and same path to get it converted into just a mobile app from where you can use the credit card. So virtual cards is something which is getting picked up. And what CCMS has also allowed to, that has also helped to build a proper, you can say, journey for the customer as well. So be it onboarding, be it setting up of credit limits, credit transactions, or statement generation, account security, all these things have been handled by the credit card management system. And upon that, for the onboarding, as well as Chris was mentioning earlier, into the business model, the credit card customer segment is going beyond the traditional business models. So somewhere CCMS is also playing its role into this expansion of onboarding. the customers which are traditionally not a salaried or self-employed class. Largely, it would be like I mean the ones which have either they are new to credit or having a very limited exposure to the credit. Yeah, talking about the part credit exposure. So credit exposure or the credit worthiness is largely assessed by the banks using the credit bureaus or the card issues by the by the help of credit bureaus. So credit bureaus helps to define the credit worthiness as well as payment history, credit utilization ratio. It will be number of loans, credit, the total asset or loan accounts the customer holds, and the credit score is something which you typically been referred while issuing the credit card. Yeah, I mean largely the initial getting criteria of issuing the credit card will largely depend on the what is the bureau score that one is holding. Yeah, from the perspective of account aggregators have been one of the entities which are simplifying onboarding services a lot. I mean, be it the getting the customer onboarded through the mobile banking option or through the internet, I mean, internet portal or the web portals. It has been very much simplified because the earlier challenges of sharing the account statements have been drastically simplified by the account aggregator. So they help to give you the financial data information through consented way through the account aggregators, as well as they help to ease out the credit underwriting by reducing the load of paperwork or exchanging of document among the entities. Yeah. Apart from that, payment switches are the one which are very much you can say core to the credit card transactions. I mean, be it having the uses of credit card or ATM, POS, UPI, payment gateway. Anyway, wherever the issuer or acquirer needs to connect with the network to exchange any of the information or the communication regarding the transaction, they have to have the payment gateways onboarded. Payment switches onboarded. So largely these payment switches are also transforming now, and they are also getting merged into the something called as a digital payment hub as well, where you can have multiple payment services under one you can say the consolidated packet as such. Yeah. Talking about the rewards, rewards are the one which are driving the credit card a lot, right? I mean, many of the people have one or more credit card, and whenever you transact, you just think back of your mind which card to be used, where the rewards should be higher. I know. I mean, it cannot be the case with everyone, but largely that has been one of the factor which has been considered. But if you see the earlier the way rewards used to a bigger one was the generic. You will have the points on your card, and then you can spend those points and convert into getting either of the gift or something for yourself. But the structure was not that clearer to everyone. So many of the time people tend to lose those rewards points. So after that, that got converted into the cashback, but not always the cashback also would be feasible for the issuer. So, with the help of current or the new age reward partners, what has been provided is like to have the specific rewards for the customers. I mean, if I'm largely doing the travel related transaction or traveling for the work purpose from one city to another, I likely to have more, you can say, transaction on that credit card, which has been used for the booking the either for the hotel or the airlines. So I would get some discount on or the some sort of rewards or some points on those transactions. Then that would be useful for me as well. So the drive as a customer to use that card would definitely be higher. So this type of tailored, you can say the customized or personalized offering of the rewards have been given. So definitely this, this is not the only driver which is giving the pool or you can say which is turning this on as a credit card consumption per se. Fraud risk management Largely, these are the platforms which provide you the real-time fraud risk analysis. I mean, if you are having a transaction in India and the next transaction happens outside the India, definitely you will get a call from your credit card issuer stating that the transaction is seems to be not in line with your location, etc. So that is very helpful, and the real-time analytics which has been used today's date, that definitely helps a lot. So tokenization was one of the perspective which brought in by the regulators, stating that to make sure that the credit card details are not used anywhere, and any merchant who is accepting the credit card or giving an option to save the credit card details should not hold the credit card number as such. So that has been replaced by the token. So most of us must be knowing about this very clearly. So KYC and risk management platform plays the key role for the onboarding of the customer, and after that also having to track the change in data pattern and the warning for the businesses about the upcoming risk about the particular customer would be helpful, likely to have multiple default payments or missing out the payments regularly. Something of that sort is where the AML and risk management platforms are helping a lot. Co-branded, we talked about much, so I'll not spend time of that. 3D Secure is something which are the platforms which helps the issuer to verify the cardholder's identity. I mean, starting from the if you change the typically if you change the device, if you do the high value transaction which you usually don't do at that point of time, this network partnered 3D Secure entities helps a lot. Reward system, again we talked about it, like there also the player like Hyperface have simplified a lot, will to you don't need to worry about to have multiple reward or co-branded partner onboarded. You can have the one platform which acts as a credit card as a service for you. Yeah, talking about the market growth as such, I mean, following the era of the growth of digital payments, credit cards are also not left behind. So, adoption of credit card in the country have been surged in past few years. I mean, logically, to have the bottleneck or the mindset of not using credit have gone now. I mean, in today's date, credit card is used as simple as the way you use your debit card. So in between the period era was there where the credit card was been understood that like this is like you're taking a credit for the user. So it was been used for specific uses or specific value of transaction, but that is no more true now. So few of the large sector banks which are leading the market, and still they are holding the larger set of customers out there. Yeah, a few of the component would be like co-branded credit card. We talked about it. I mean, giving the specific co-branded partnerships, having a as a offering to the loyal customers or the repetitive customers by the brand, helps them to give the proper rewards and the cashback programs for them, which helps them to have the customer engagement as well. So new age tech stacks definitely having API first approach. Something like having a virtual credit card where you get the a credit card as and when on the go itself, and you can use it directly, which helps to have the quicker go to market as well. We know many of the credit card players which are helping the banks, which do are active as an issuer, but with the partnering with such new age tech stacks, they have enable themselves to come into the market and attract the customers which are unlikely to be their you can say their focus customer segment earlier. Yeah. The evaluation of customer is like have also been changed. As I was talking earlier, the credit is no more is considered as a taboo. It is something which is very commonly used. And yeah, definitely the regulatory frameworks are also supportive. I mean, if we talk about the MasterCard regulation, which had come into the or got refreshed into the 22, or it can be digital payment security controls. Largely, these are all in the favor of customers who has the interest of borrower as well as card issuer it's been considered in both of the frameworks. So in next few of the slides, Chris will talk about the regulations as well. Just a few slides on the trends. What are the trends happening here? Tokenization, we talked about it. It has helped to increment the, increase the security enhancement as well as the scalability and the regulatory compliance perspective is something good taken care. So basically, tokenization, in a short, is where you put the if you want to save the card at any of the merchant gateway, it can be a payment gateway or into the mobile app. There the option has been given if you want to save the card. Now, if you click on the save card, this card number what you have entered get replaced with the token, and that simplifies the security of the card number at the merchant data end as well, because this token has been maintained by third party, as well as the access to get the card number through the token is only available to the issuer. That definitely helps to protect this data from the third parties which are not part of that transactions. Virtual credit card have been, is one of the entity where you will have the cards on the phone, basically, which has been called as. So that has helped to have cards easily available on the card. So whenever you apply for the card or you get the card, you immediately get the virtual card, which is if the customer is pre-approved, you will be able to use that card easily. So that definitely is going to help for the existing to the bank customer. So banks will be having, or rather, banks do have options to get the credit card on their mobile app. So then and there itself, the card also been issued and the card can be used immediately. So that gives you the option to use the card immediately, safety for online purchases, because these details cannot be given to anyone, and like to have carrying the physical card, it is into the phone and protected by the password of the app as well as the phone, etc. Eco-friendly, of course, it does not, since it is a virtual card, no need to mention that. From the ease of issuance and use, since it is a handy and by the virtue of using multiple digital payment apps, the phone is something which you carry always, right? So you don't need to carry extra card with you. Credit card as a service, as I was mentioning earlier as well. So these are the type of companies which provides the definite services of the credit card easily available for the one who wants to enter into the credit card market. So it allows businesses to launch the credit card programs without investing heavily, because the parts of the credit card, what we talked about earlier, be it CCMS, that is credit card management system, be it FRM, AML, or other partnering components, which makes the credit card issuable and workable. So that needs a lot of investment. So apart from the risk, what you can say, the putting up the risk category aside, this is the major investments which comes as a part of credit card. And of course, the rewards and the marketing of credit card doesn't leave behind that. So yeah, that is where the credit card as a service is being coming into the market, which offers you the customization and flexibility. And definitely the what you can say, the go-to market is very fast, because the platforms are ready. You just have to have the plug and play, and you should definitely, one prerequisite would be to have basic set of APIs available with you, so that you can support the credit card stack to connect with you and start issuing the cards. Yeah, so having the variable cards or personalizable cards is something is also coming up. I mean, giving this the example of Pay by Indus, where the cards have been embedded into the ring. Also, be it there are few of the players who are coming up with keychain-based cards, right? So this is where the tokenization helps a lot, because that is where these devices will hold the tokenized form of the cards, that is tokens, rather than having to card number store into that. So that gives a very personalized way, and just a simplistic for to use, and Yeah, I mean, with the customers of the young age would definitely be adaptable to this sort of cars being used at the multiple places. So apart from that, the metal cars are have also been one of the driving factor which has been accepted by the market and also been seen as a new innovative way of carrying cars. Yeah. So we'll talk about the regulatory framework and the part about some of the regulations and its implications around that. So we'll just ask Chris to take over this.
So now talking about the regulatory framework around credit card and its implication. So these are a list of regulations that pertain to credit card and some of the major master directions as well as the compliance standards that pertain to it. We'll be majorly looking at the master directions of credit card and debit card issuance and conduct directions, which was updated on March in 2024. There's also the digital payment security controls as well as master directions for know your customers, which is also an important aspect of the regulations. There's also the PCI DSS compliance standards, which is a very important compliance standard for the payment card industry. So, talking about an introduction to this, to the credit card regulations, the main overview when it comes to the regulations would be the purpose to protect the consumer's interests. As with credit cards, over time, it's been known that consumer interest is something that has been a very big aspect of credit cards. So, to ensure the fair practices related to that, as well as the enhance in security and integrity of credit as well, credit cards as well as other operations that the RBI is pushing for. This is one that takes care of that. And looking at the highlights when it comes to this regulations would be the introduction for more stringent protections form for the consumer against fraud, a better governance to ensure more stability in the financial system, and so on. And the main aspect as well, public interest. The regulation aims to safeguard the consumer's interest as well as ensure that there is transparency and accountability in the credit card and debit card transactions. So now talking about the eligibility for the card issuers, the eligibility for scheduled commercial banks and urban cooperative banks stand at a net worth of 100 crores. Both of them are eligible to undertake a credit card business and issue cards either independently or in tie-ups under specific conditions. But the base would be that there would be a net worth requirement of rupees 100 crores. Looking at regional rural banks, these banks can issue in collaboration with a sponsor bank or other banks like a scheduled commercial bank or so on. Taking a look at NBFCs, NBFCs must have approval from the RBI prior to uh, uh, engaging in the credit card business, and there's also specific net worth that they have to show that they own in funds prior to engaging in the credit card business. Now, talking about the governance framework is one of the most important aspects of the regulations, as it is the governance framework that takes into considerations the policy aspects as well as the overall governing of the credit card in the organization, with one of the main aspects being board approved policies. Each issuer must have a policy that is approved by the board that takes into consideration uh, takes into consideration all of the compliance aspects related to the operations of the credit cards and its issuance. The review mechanism is an amendment that has been added, which is an aspect wherein the issuers will have to conduct a half yearly review, that is a review every 6 months of their card operations. This mainly focuses on the customer service, the fraud and the risk management aspects during the review. And there is also the requirement that transparency and compliance of all the policies that RBI has put forward should align with the practices of the credit card business. Now, talking about the issuance of credit cards and the compliance related to that, there's a clear application process that must be followed. There should be a clear one pager on the key facts on the credit card applications for the same. There's also the KYC compliance, which is a strict guideline that needs to be added regarding the verification of the identity of the customers. Then there's the MITC provision, which is the most important terms and conditions of the credit card, which must be shown at the time of onboarding. And if there are any possible changes that occur, the changes must be made to the MITC provision. Consent and communication is also a very important aspect when it comes to the compliance aspect, wherein the customer consent needs to be explicitly provided at every stage where the consent is required, and without explicit consent of the customer, there can't be an action or a process that can be undertaken. Another aspect that we look at is unsolicited cards. With reference to issuance of unsolicited cards, there's a prohibition with penalties that is levied. So any card that is sent out to a customer without the explicit consent of the customer is would be considered an unsolicited card, and the stringent action that will be followed along with the responsibility of the card falls on the issuer. Talking about the transparency with respect to charges, this is an aspect that has been discussed multiple times, wherein all the charges related to the credit card should be shown by the issuer along with the terms associated with the credit card. Underwriting standards are an aspect that is majorly considered, wherein the credit issuer has to independently assess the credit risk of the applicants when required, and they should consider the financial ability of the applicant and the credit available to the applicant from other sources prior to the issuing of the card. There's also credit limit management that credit issuers have to take into consideration, that they cannot exceed without a special sanction or without explicit consent from the cardholder. Now we'll talk about the major aspects of the credit cards types when it comes to the issuance. So, with respect to personal cards, it's issued only to personal use, along with the option of adding on a family member or so on when required. Then there's business cards, which are designed explicitly for the business expenses, and these can be a charge card or linked to credit facilities like overdraft. As with the charge card, there's not a specific limit that pertains to the charge card, but the credit amount which is taken out must be repaid in full in the time of the settlement. And coming to corporate credit card, this is issued only to the employees of a specific corporate entity, and the liability can either rest with the corporation or the individual employee whom it has been issued to. And the co-branded credit cards and other credit cards which are linked to specific aspects fall under the special category cards. Now, talking about interest rates, charges, and billing, transparency in the charges, interest rate statements, billing, and so on is one of the most important aspects with respect to this regulation. When it comes to the annual percentage rates of the card, all of this must be disclosed to the card issuer prior to the issuance or during the application stage. All charges that are associated and all fees that are associated needs to be shown with respect to the calculations and so on. And the interest rate and the ceilings with respect to each card or with respect to the board approved policies should be in line and should be compliant. When it comes to the billing cycle, all of the card issuers should make sure that the billing cycle as well as the dispatch times are provided. And with respect to statements, all of the transactions fees and interest charges should be shown with no hidden fees that are levied. And dispute resolution is an important aspect, wherein the process for the dispute resolution as well as the procedures should be shown clearly. Now, talking about the closure of the credit card, when it comes to credit card closure, there are two aspects of credit card closure. One, where the credit card closure is a request from the credit card holder, and one where the credit card has lain dormant for a period of more than a year with no use, wherein the so with respect to request for closure from the card issuer intimates the card holder that the card has been dormant for a period of a year, and there'll be a intimation that is sent to the card holder, and at the end of the 30 days, when if there has been no reply from the card holder, then the account will be closed by the card issuer. However, if it's the card holder that has requested a closure for the credit card, then the card issuer has a span of 7 days during which they will have to take into consideration the settlement of all the dues as well as the closure. Penalties for any delay when there has been a request for closure will be payable directly to the card holder from the card issuer's side. And when it comes to closures, card holders should be notified of any of their closure of cards either through one of the mediums of email, SMS, or other electronic mail. Now, talking to the regulations with respect to form factors, obviously, banks and card issuers are now given the go ahead by the regulatory bodies that factors such as wearables along with traditional cards are applicable for issuance. This, however, follows the exact same compliance guidelines as the credit card, and any aspect of the guidelines which applies to a card applies to the form factor. Talking about the compliance with respect to guidelines, again, they fall under the same categories, and the security measures for the wearables also fall under the same categories as a credit card. Compliance with respect to KYC, AML, and grievance redressal. The card issuers have to adhere to very stringent guidelines when it comes to KYC compliance and anti-money laundering aspect. This is so that there is a prevention of any misuse of financial aspect as well as protection for both the card issuer as well as the card holder in case of any misfire in the financial activities wherein verification of identities, maintenance of records, and money that has been lent out and so on. Now, talking about the regular monitoring and other aspects that are established along with it, there should be a continuous monitoring for both KYC and AML regulations as well as compliance for the same. Financial institutions should also have established grievance redressal mechanism in place for handling the customer compliance. There should be a timely resolution for all of these aspects within specified timelines so that the customer is satisfied with any grievance that has been redressed. And the escalation and the transparency for all of these procedures as well as processes should also be shown throughout the process. And this is a very crucial aspect of the compliance standards. Now, talking about outsourcing when it comes to financial services, the main aspects you would have to consider would be the outsourcing policies with respect to the credit card, the risk management of these outsourced activities, as well as the data protection. When it comes to outsourcing policies, it falls on the issuer to adhere to all the guidelines with respect to managing risks and code of conduct of outsourcing of financial services, as well as maintaining any confidentiality and integrity of all the data that is being sent out to the outsourced entities. The risk management aspect also falls on the outsourcing arrangements as well as the card issuer, so that there is no compromise in the quality of the customer service. Data protection is one of the most important aspects when it comes to outsourced financial services. The data of the card holders should always be protected by the issuers, and it is their main aspect of responsibility. Uh, and we'll also be taking a look at the co-branded credit cards and the business credit cards, which are one of the important aspects when it comes to the issuance of co-branded, wherein any revenue and promotional details are shown, as well as business cards, credit cards, which are also tailored to specific needs and so on. Regulatory compliance for both co-branded and business credit cards are very similar for both of them, and both regulatory compliance rules apply to them. Talking about the brand partnerships for co-branded, the co-branded arrangement should clearly indicate any kinds of partnership, and any products that are marketed should be of the co-branding partner alone. Regulatory approval for the co-branding requirements, since there's no prior approval required from the Reserve Bank for co-branded credit card and specific conditions apply for it. There's a regulatory approval for the same. The revenue sharing and risks can be specified in the terms and conditions of the co-branding agreements, and all potential risks and reputation risks must be taken care of by both. Yeah, and now I'll be handing over to Vikrant to take it forward.
Yeah, thanks, Chris. That was the overview from the regulations and from the overall credit card offerings as such from the issuer as well as co-branded partner or be it acquirer side. So a lot of question was there into the chat window, which we tried to answer on that. Can we also put up the feedback form which was been shared? So would request all of you to share that, which helps us to build our content and refine it further to your expectations, because these are the sessions which we love to have with all of the friends like you to share our knowledge and to learn from you as well. uh, yeah, so there is a request from Kanan stating that can it be specifically session for the commercial cards and for the B2B segment? Yes, definitely, Kanan will do that. We can connect on the LinkedIn as well if you have any specific question according to this. Yeah, from the FLDG side, from the credit card perspective, as of now, there is no different view from on that perspective. Maybe from the side of regulatory risk, yes, definitely. There are a lot of guidelines which have been, which have been considered as guidelines, or which have been not much been seen into. So that's where we also help a lot. So if you have any specific pointers to discuss, we can connect on the LinkedIn so that I can give you the relevant answers per se, because here in with specific question, may not be able to just is the query what you have. So yeah, either me or Chris, we are directly reach out on our LinkedIn as well, so we can connect and take the discussion forward. Uh, yeah. So with this, we'll just come to end of the session. So these are our services which we largely allied into. So like there was question from the perspective that what would be the risk the impact of the risk assessment, etc. So those things we do take care of as a part of our regulatory compliance services. Product and program management, where we largely try to help from the product perspective, the product construct, customer journeys, as well as the you can say the roadmap for the product. From the program management perspective, so be it the implementation or be it the partnership which you want to enter to launch the credit card as a service, or credit card as a new product into your set of product bucket, there also we will be able to help you out from the perspective of enhancing the existing product, or thinking about launching a new product. So it always helps to have the view of the market. That is something which we gather through the benchmarking. And of course, the digital strategy is where we largely look after the go-to market, as well as the business model, or what will the business projections or investments that you have to do as a part of credit card services. So yeah, that is all from our side. So me or Chris, as I mentioned earlier, are always available on the LinkedIn. So we can connect at any point of time if you have any specific questions. So thank you very much. Thank you for being there with us. And yeah, have a good evening to all. Yeah, thank you.